Midweek, everybody. Thanks for checking into our latest TDR Traded Black podcast. Hope you're all well. Presented by Dutchie. I'm your host, Shad Dale's got a big one here today. Noah Hamman is coming in from AdvisorShares ETF MSOS. A lot of you have a lot of questions. They've had 19 straight days of inflows totaling over $100 million. So we're going to ask him about his strategy as to how he plans to allocate that. Sitting on a lot of cash right now. We'll find out why, knowing that there could be an imminent announcement at any given time. Plus, if you saw the news earlier this week, Psilocybin could be rescheduled to a Schedule 2. So it looks like the war on drugs and that whole initiative from the 1980s could finally be over, because drug policy is definitely being looked at in a different light on so many different angles. So no better person to have when it comes to cannabis and psychedelic law than Shane Pennington. So a good banger back-to-back with Noah and Shane. So let's get to it. Welcome in AV here on a Wednesday. Good to see you, sir. How are things?
How's it going? Good. So it's funny. Everybody's happy that stocks went up today. So it's
got a nice little close, didn't we?
Sentiment shifts. It's kind of bipolar, but let's. I don't blame everybody. I mean, everyone's in good moods. Everyone is in good moods and good spirits when stocks go up.
Back and forth
for unjustified reasons, just like they're conspiratorial and manic when stocks go down for unjustified reasons.
Well, I think the first segment here, a couple of weeks ago, we were all worried about Terrence Cole not mentioning rescheduling in his first public announcement. We're all worried. We had Eric Berlin on and basically outlined that it was all about enforcement, and the dust had settled. There was clear skies, and everybody understood that actually was a good thing. So we want to get the same thing as to what's going on, because there's a lot of questions about allocations and all that sort of thing regarding MSOS. So let's bring on Noah Hamman from AdvisorShares. He is the founder. Good to see you, sir. As we bring him up, there he is. Good day, sir. How are things?
Good to see you guys.
Good. How's life? There's a lot of stuff going on right now, and there's a lot of moving parts, and it's crazy, and it's good to see, obviously, some attention in this space. Anthony and I have seen you, Dan, and Mackenzie over the course of a number of years. We've seen some dark days, and I don't want to sit here and say that it's all clear skies and we're out of the woodwork series just yet, but let's face it, 19 straight days of inflows sure shows that we've turned a corner, does it not?
Definitely does, right? People vote with dollars, and so far the votes are going well.
Yeah, that's for sure. Well, let's talk about this and get right into it. As I said, 19 straight days of inflows totaling more than 100 million. So how are you think about deploying capital, and why hold so much cash right now, knowing that we could, and I say could get an announcement at any given time?
I mean, the high level answer is we think about deploying it carefully, right? It's a lot of money in smaller stocks over a short period of time. Thankfully we've been in the situation before with this fund and with flows, like this. And so you just want to be careful, right, that you're not pushing stocks too hard around. And I think some of what we've been able to fix over time relative to when creates come in and trying to get rid of some of that end of day volatility relative to market maker hedges has really helped quite a bit. But, I think one, it's, trying to be careful about it. And then two, remembering, this isn't the first time we've had a president say they're going to fix cannabis.
Yeah.
And so I hope this one, it's real this time. And so somewhere we have to balance the approach, right? Well, I mean, we're active, but it's designed to be a fully invested investment strategy, right? We want people to move in and out when they are comfortable and when they want or don't want cannabis exposure. We're going to, pick stocks around the edge, which is difficult in these capitalization size stocks. But we want to be careful.
Okay.
No, something that's been a hot topic. I mean, the velocity you've been buying Curaleaf over the past 2 weeks compared to, let's say, its peers being GTI, Trulieve, and Verano. It's been outpacing all of them. I know you were a net seller of Trulieve and GTI yesterday, and the GTI numbers from a buying perspective have dwindled greatly over the last 2 weeks, when people want to argue that GTI is the most fundamentally sound business in this space. How do you rationalize that, and why were you, let's say, a net seller on the tape yesterday of arguably the best two names in the space? Is it something to do with custody and swaps, or is it something to do with the active management strategy of the fund?
So I got to think about the order in which I'm going to take those questions,
Okay.
right? So with GTI,
I would agree.
Yeah. I would agree with you. Fundamentally, strongest company in the list, right, in the universe of U.S. focused companies. But I would say fundamentals don't always work for price action, right? And at the end of the day, the fund's priced on valuation, not that company's fundamentals. And so they've been a great holding, I think, in this long, painful, downturn that we've had. I've been happy to see them, not just our top holding, but significantly overweighted during that time frame, and I think that really helped performance. Will
Okay.
it help us on the upside? Yeah, I'm not so sure. We'll see. I don't know. It's all a guess and a bet. But I think as it relates to those two companies in particular, I'd zero in on two attributes that make something like maybe now three attributes that make something like a Curaleaf stand out. The first is, Curaleaf's move to the TSX. I think, as everybody knows, it allows us
Okay.
to hold those shares in kind. So liquidity is important. Liquidity matters. And so we're going to lean towards a liquidity when we can and where it makes sense to do it. Not afraid to invest in smaller ones, obviously, if you've seen the holdings, but
Yep.
liquidity in this space is valuable. So I give Curaleaf the nod there. I think international exposure, and for me, what that coincides with is maybe better institutional interest. Just an opinion, not a fact.
Okay.
Um, I think that positions that company better. And then, third, I might mention, Curaleaf, as far as I know, is intending to communicate with their shareholders on quarterly conference calls. Again, institutionally favorable, and just something I like to see in general, right? We want to get access to the same information everybody else has.
Hmm.
So I'd add that third attribute that for me would say, Curaleaf has some attributes that are better. Who's going to outperform from a price perspective over time? I don't know. But I've got both, and I think we'll be good in the whole scheme of things.
Fair enough.
Okay. I mean, but all that is true. But at the same time, how can you still justify, let's say yesterday, is that like a one-off, like being a net seller of the
Oh,
two
to answer
best
that
names in
question,
this?
absolutely. Yeah, I think people were kind of
Because
picking
that was
up on that.
puzzling. That was
Yeah, no, I
puzzling to
think
say the least.
people were picking up on that we were adjusting those sizes, not certainly due to flows. We had inflows coming in, but we were running into some capacity challenges, right? It's something you're going to run into, not just with swaps, right? It's not just so easy to buy as much as you want of small micro cap stocks, or certainly not as easy to buy as much as you might want at a certain price.
Hmm.
But yes, we run into several challenges, and everyone does. It's not unique to us. It's universal with swap providers. You're going to have one balance sheet challenges. So when you look at the swap providers, they have very different attributes from a balance sheet perspective on what they can just afford to carry on their books. Two, they're going to have some of their own unique preferences. Obviously, some of these companies are so small, and then they are carrying this in part on their balance sheet. Sometimes they don't love to carry that on their balance sheet. And again, you'll get different answers from different swap providers. Some of it is their own investment percentage of outstanding share limitations. And what we've seen is that answer, again, different for each swap provider, and that percentage can ebb and flow, right? They'll get their own tap on the shoulder from their compliance people, depending on where they are in sizing.
Okay.
And so it's a relationship with them, right? It's a back and forth. Sometimes there's things that we need from them where we're trying to get exposure on certain things, and they can be more flexible with us and help us out. If they're running into some of their own challenges, well, then we can make adjustments, right? We might sell off like we did in some positions yesterday, but I'll find the ability to either move that back in over time, or move it maybe into an equivalent position where I may get more or less or the same return. So that's the nice thing, is we still have plenty of choices of what to do with that cash. We're not running out of options, but
Yeah.
you'll have unique issues here and there that pop up and then go away. We've had plenty of them in the past. It isn't so evident sometimes, depending on what you see relative to the holdings that are updated each day. But yesterday was a good example where it's a bit more obvious. And I've seen other people talking too about, when we decide to hold Terracin and Curaleaf, physical versus swap. And I've seen people comment about how they've seen us move positions from different swap providers, right? For those that are looking at the nitty gritty details,
Hmm.
all that stuff is constantly going on in the background behind the
Okay.
scenes, making tweaks, making adjustments. It's not easy. It's a lot of work. Dan works his ass off. We've done some really creative things in the swap space, honestly, some of which I wouldn't even describe, because I, quite frankly, don't want to give competitors an advantage to know what we are doing. Because remember, if you recall, we were the first to use swaps, and
Hmm.
some of our competitors thought we were doing illegal stuff, in fact. They've changed their mind, obviously. We were the first ones to try to, turn YOLO, our global strategy, into an all-in kind by using MSOS as its holding.
Hmm.
Then that started being copied by others. So the things that we are allowed to hold close to the vest, we're going to hold close to the vest for competitive reasons.
Okay.
Okay.
When you get a basket at the end of the day, is that at the discretion of the market maker, or that's at the discretion of what the fund manager wants to take in terms of holdings? Because I know Dan had said a couple of weeks back that basket comes in indiscriminately, and it's not as per the weighting of the fund. So who has the say in what's coming in that basket, and does that basket have any implications on, let's say, risk of exposure to the counterparty? Because that basket being sent to you, logically thinking about this, if we were going to get a headline and I was that counterparty, I don't know if I'd want to have the potential exposure if I was doing something to counter trade that with GTI and TrueLeave. That wouldn't make sense to want to kind of be on the side of that trade. So the basket that's delivered to you, who's really making the decisions there as to what assets?
If it's okay, let me start at the end and work back to the beginning. So the thing at the end, relative, and if I heard it correctly, the credit concern at a swap level, from my knowledge and my perspective, has nothing to do with what stocks they'll trade or not trade, right? So when Lehman went under, or when Bear Stearns went under, what they were offering swaps and really had nothing to do with it, right? They had credit issues at a firm wide, and that was a problem across the board, whether it was S&P 500 swap or Treasury swaps or whatever crazy swaps they were doing. So the credit risk is really at the firm level, right? That's what we look at. And so again, we're sort of fortunate to have a pretty big one with a huge balance sheet, but also, I'd call mid-tier and then smaller tier. Then to go to the beginning of the question, which is who decides? I mean, ultimately the answer is both decide, but where you see what I'll call the optimization in the baskets that are traded, that's really more driven by the market maker, right? Every day they're out there making markets. You see plenty of volume trading on stuff and of the ETF. And they're going to hedge, right? We've talked, or Dan's been on your show plenty of times and talked a lot about that. We talk a lot about it on X. And not surprisingly, with these small stocks, many of them with really wide spreads, if the market maker can manage their hedging risk where they have to get comfortable with it, and maybe let's just say buy half the basket as opposed to the whole basket, well, that's more cost efficient for them. And for businesses that run on fractions of a penny margin and then just try to repeat that as much as they can, those little differences make a lot of difference to them. So they are deciding on their own what they're using to trade in that basket, and it can be different for every market maker, and some market makers are their own AP, but some have to go through another AP to make a creation or a redemption unit. So it'll vary by each one, what risk level they are comfortable with their optimization. But I guess so two things can happen if they are presenting a basket for us to be able to leverage at the end of the day, right, and try to transact with them when and I'll use the CREATE as the example. If there's a stock in it that Dan doesn't want, and I'll say this has happened before, I know, he can say, yeah, we'll take the basket, but we don't want that position.
Okay.
And then they have a choice.
That's forced. What happens then? Are they forced to settle?
So they have a choice. No, they can say, all right, we're going to pull back on the create and we'll come back to you later, and just pull the whole, request to create back. Or they'll say, okay, fine, we'll do cash in lieu here and we'll deliver the rest and we're good. So we don't have to take anything that we don't want. And then if they're delivering stuff that maybe Dan does want, and he might want to buy, well, he's not forced to buy it that day. He could, but as we are building cash and not getting all the positions that represent the full basket, he can start to allocate that into, whatever he wants, as long as it fits the investment strategy, of course.
Gotcha.
So if the market makers are arbing certain names, or if hedging on certain names, can the market maker craft that basket to suit their needs and then serve that to you technically at the end of the day to settle up? Or it's in theory?
Yeah, I mean, however they're hedging it. So that could be a lot of this stock and a lot of this stock and either none or a few of this one, whatever weighting, and it doesn't have to match the ETF. At the end of the day, they'll tell us what they have that they want to, cross with the swap provider. It's not really technically us, right? At the end of the day, we do it at the closing prices, so it doesn't, advantage one party over the other. But we know what that looks like, right? Doesn't show up as a surprise. And so again, going back to if it's stuff that Dan doesn't want, he's like, I'll take all these, but not this, or I'll take half that. And so going back to it sort of being a bit of a relationship, at least as it relates to navigating with the swap provider, who we are working with to coordinate with APs and market makers. Yeah, if we don't want it, we don't take it. And their choices are live with it or pull back the request to create or redeem.
Gotcha.
Okay.
I want to ask a couple questions just from some of our audience that we reached out before this live stream. They said, we've seen situations where creation might equal 3 times a stock's daily volume, then the print shows up after hours. Are you concerned that someone is holding MSOs long while shorting the underlyings at the same time? Care to comment on that?
I need to wrap my head around that. So they're saying that the fund has traded more volume
3 times the stock's daily volume, then the print shows up after hours. Are you concerned that someone is holding MSOs long while shorting the underlyings at the same time?
Well, I'm going to start on the first part. I guess I'd probably have to see some examples
Okay.
to really get a better picture of the scenario where the fund is, you're saying, trading, so either buying or selling more shares that day than show up on the tape. And I assume tape, they mean OTC US traded and
Correct.
on the CSE directly.
Correct.
I'd have to look to see when or how that happens. I'm not saying it doesn't happen,
Yep.
but I gotta imagine it's pretty rare. So then the second part of the question is what again?
Are you concerned that someone is holding MSOs long while shorting the underlyings at the same time?
So I don't know how that relates to the first part, right? So I'd have to match up the volume to figure out the answer to that question. But I'm operating under the daily assumption that somebody out there is long the ETF and short the underlying for whatever reason. And it certainly makes sense that a market maker, if they were long, so if investors were selling to a market maker, right? So investors are getting rid of MSOS shares. I, as a market maker, I'm starting to get long. What am I doing to hedge that position? Well, I'm shorting the underlying. And then what will I do to get whole? I'll go to the fund and say, hey, I want to redeem. And so in a redemption, I got to make sure I'm walking through the steps correctly. Right? In a redemption, we would typically deliver out the shares, but it's swap based. So we would need to, in a sense, buy. Well, they're a natural short. If I cross at the closing price, not advantaging one over another, they're covering their hedge to buy. I'm meeting my redemption obligation to sell, and we'll match up at the end of the day. So I walk around operating that someone's long. Some market makers are long inventory, hedged with the underlying, or some market makers are short inventory and long with the underlying.
No, so with the total return swap environment, obviously it's an efficient tool for what we needed to do in this instance. Within that ecosystem, though, I mean, it's very hard to keep the counterparty honest. You don't know if they're short the stocks that they're coming into. You don't know what they're doing on their side to manage risk. Are there any guardrails or any sort of ways that on the AdvisorShares side that you can keep them honest, or that you've looked into if some of that stuff is going on, or is it just part of the game? And to preface that, I'm not one of the people that thinks like shorting is evil or shorting is whatever. Shorting is part of the market. If you want to play in the capital markets, shorting happens to be part of it. These houses, Nomura, Jane Street, Citadel, Goldman, they do whatever they got to do to make a buck. And it's just part of being a market participant. Unfortunately, we're in an illiquid and an inefficient market. But my real question is there anything on your side of the equation that you've installed or used to keep them honest at the end of the day?
Not really, right? There's only so much you can do, right? So I'd start by answering the question by giving a different example, right? So I think of, was it Man Financial, the futures trading firm with John Corazine,
Yes.
where people thought they had stuff segregated. Turns out they didn't have it segregated. It was commingled with the firm assets. I can't speak to what was the right or the wrong thing to do, only knowing that people were surprised to learn their assets weren't segregated by a firm that they thought was complying with all the rules and the regs, and everything blew up, right? So unfortunately, firms can do some bad, shady stuff, right? We work with BNY Mellon that does fund accounting. Well, they can get the fund accounting wrong, or they're custodian for some of the physical shares. Well, maybe they are commingling. I don't think that they are, but maybe they are commingling those assets. So many things can go wrong with so many different, service providers in the fund. Using swaps as an example, what I would say is the good news about swaps is it's not so Wild West anymore. You have to be a registered swap dealer, SEC registered swap dealer. We only work with SEC registered swap dealers, so we are leveraging or counting on the ecosystem, right? The OCC who looks over banks, hopefully that's all going well and they're doing their job. The SEC who looks over swap dealers, right? They're under their rules and regs, and probably FINRA as well. So you hope, the regulators are doing their job there, but
Yeah.
I can't go in and manage somebody else's business. It's hard enough to manage my own.
Mhm.
Huh.
And
But you do
ultimately,
have checks and balances, right? So
yeah.
we try to keep things, balanced relative to managing collateral. So you guys have seen that movement sometimes and things like that. So there's little tools that you can do in there. We can diversify our relationships, add a little insurance on top. And you just try to do that the best that you can, and hope, and they hope, right? So they have the same risk with us. What kind of shady things are we doing on the side? Well, none.
Yeah.
But everyone has that business risk against everybody, and I can't manage every business's risk. I've got to, at some point count on the system working. But like some of those clients of Man Financial saw, sometimes it doesn't work. Or sometimes with Lehman and Bear Stearns, sometimes it doesn't work, but it's just a function of the risk. It wasn't fraud. It was, as far as I know, it was just risk. Over levered business. That's not illegal.
Yeah.
It just didn't work out for them.
Yeah. Well, we suspect that, and I think a lot of investors suspect that institutions may be shorting this ETF. When we look at this, like, do you have any insight into that? Have you looked at that? Is it something, or is it?
No, I mean, you guys see the same short interest data reported that I do. I haven't looked at it in a while, but last I looked, it was, I don't even know what, 10 or 13 million shares or something like that. And I'll see posts, on Twitter where they're like, oh, yeah, go after the shorts or they're going to get stuck. They're not getting stuck, right? We're trading 10 million shares a day. If they want out, it seems pretty easy for them to get out of their short
Mhm.
position.
Yeah,
So it's nothing that I'm focused on or worried about. And it's
I
something
get
that
it.
hopefully anyone that gets into the ETF space knows. One of the functionalities of an ETF is long, short, buy and hold, active trader, do what you want, an efficient structure to do it in.
What led to
Mm.
the decision to start to add SNDL and VFF as components of the ETF? Was that diversifying? Was it a function of custody versus swap, or was it kind of like, let's say, a bet on them starting to get exposure to the United States cannabis opportunity on a go forward basis and fall within the mandates of the ETF eventually?
I think the answer is all of those things. Does it help with
Okay.
liquidity? Of course.
Mhm.
Do we see that they could derive some benefits from a schedule change? Yeah, absolutely.
Yeah.
And so, really, at the end of the day, what really genuinely matters most to us is by putting that in there. Sure, it helps with liquidity, and sure, that's a factor in the decision making process. But more than anything else, we need performance, right? We are competing
Mhm.
against several other products in the marketplace. And if if Dan doesn't think that that gets him to where he needs to be performance wise,
Yeah.
add something else. Don't add that.
Okay.
So it's all those things, but certainly it being listed helps a lot. And those two companies in particular, relative to the U.S. holdings that they have, are very helpful. And at the end of the day, it fits within the prospectus, which is the most important thing, right? From a regulatory perspective, that's what we're going to be held to. If I don't outperform the other products, the regulators don't care. I'm just going to lose flows, and they're going to go somewhere else. But performance matters a lot.
Hmm.
Okay. And just question about the cash balance, because just thinking about the industry, how we work, I mean, the ETF acts a lot like a flywheel for the industry. I'm assuming the conservation of cash is building up in lieu of if we get an announcement from the administration versus, let's say, steadily deploying it over time. Because if there is, let's say, an announcement and that cash is deployed at a high velocity, you're going to see the sector go parabolic. And then, unless there's more inflows coming into ETF, chances are that bid support is not going to be there. You would almost turn over immediately. So, I mean, are you guys thinking in terms of risk to the underlying of deploying all of that cash in a short period of time with not the counterparties, but other parties that would short it being able to take advantage of that due to just the illiquid nature that custody isn't going to fix upon, let's say, an announcement from the administration?
So I got to separate the people ability to short it because I'm not sure if I understand what that means relative to putting the cash to work. So let me focus on putting the cash to work part. So I think with putting the cash to work, the nice thing that you have, even though past is not indicative of future results. I don't think since Dan's managed the portfolio, you've seen him panic and start forcing a lot of cash into the market, right? He just
Yeah.
doesn't do it. And then when you put it into perspective, what is it, 2.5% of the portfolio? Maybe not after today's
It's
gains,
small.
but so it's probably
Correct.
two
Yeah.
percent is pretty reasonable. And
Right.
it's interesting. And I want to caveat 3,000 times the statement I'm getting ready to make, but it's nice to have a little bit of cash on hand.
Hmm.
It's nice to be prepared for an industry that's going to go through a dramatic change. I look at the shirt that Anthony's wearing and thinking there's more companies that are coming to the market. And if I have 20 million to allocate to a new issue coming to the market, that's pretty cool. And still keeping it at a measurable level within the fund. And for those who really are coming to the fund to get that exposure, they're getting the exposure, and I think they're getting it more cost efficiently than they would by buying all the stocks, depending on what size. If you're investing $100, you'll probably get it more efficiently than us. But if you're investing 100,000 or a million with
Yeah.
penny wide spreads, it's the most efficient way to get that exposure. And even if they were getting 90% of the exposure, putting money to work on your own and the prices that you would move by doing that, you'd rather just sit in the ETF for a while and get the exposure than
Yeah.
not.
Yeah.
So it gives him so much optionability, and it's not that much of a drag. And we had a day like yesterday where you were a winner on that decision. Today, worked against us. And
So we're not
tomorrow,
looking.
I don't know what it'll
So
do.
so we're not looking at a scenario where it's like Trump comes out and Bondi comes out and signs that thing tomorrow. It's like push the chips in,
I don't
and
think so.
allocate accordingly. And
I
I
don't
know you
think
can't
so.
answer that. I know you can't answer that definitively. But
Right.
mechanically speaking, with what we know about the industry, if that were to happen, and that was the rhyme and reason with building up the cash reserves, you would almost be begging people to come in and start to pound it down, still with the illiquid nature of the underlyings. And then I guess my next question would be: I know we talk a lot about the swaps,
And
and
so I'm sorry. I
go
think I
ahead.
also know what you're referring to with the shorts, because in that scenario, which I don't think is a realistic scenario for us, I'm competing with the shorts to buy as well as we're buying. So I think that was the connection to the short
Yeah,
part, right? That
yeah,
makes sense. Yeah.
and then this is an obvious question, I think, but we talk about the swaps a lot. The swaps are what creates a lot of the conspiratorial thinking around
Mhm.
the ETF. Um,
Yep.
if we get if we get custody within these stocks, does the swaps go? Do the swaps go away, and then you
Not
can start
entirely.
holding? Not entirely,
No.
but to a I'm assuming to a big degree, they
They do.
go
Right.
away. Okay.
And so the perfect example I'll give you is you guys are all familiar with the leveraged single stock ETFs that are out there, right?
Yeah.
And it's on Tesla and whatever, Palantir and all these other companies they're listed and they're huge. Go look at their holdings. Because
Mhm.
of diversification rules, they have to capture that diversification with their cash allocation. They use derivatives to get their exposure. And so unfortunately for the cannabis space, right? I mean, we've got what, three behemoths, so then everything sort of falls kind of down from there. We're likely going to be, as we are today, tilted in that way. We won't meet the definition for diversification. So we're going to need to tend to that, like those single leverage single stock ETFs do, with some derivatives, but then some
Okay.
in kind. And I think what we'll be able to do is run the fund like an in kind, and then just have a layer of swaps for some positions, not all, that will still be in the portfolio. But if we can get there, our goal is to hold all the shares in kind and be voting shareholders just like anybody else for any other
Okay.
company.
Makes
Understood.
sense. Well, we're getting to be that time of the game now. We're at the end of August, and it's been what, a week and a half since Trump was asked in that presser, a few weeks. So we will see what happens. Look, we need more customers, don't we?
Definitely. Yeah. We are not even scratching the surface, I think, of people that will be coming into the space. We talk to tons of advisors who are on broker-dealer platforms where they can have access to both the stocks and the ETF. I mean, if you're on Schwab and Fidelity and Robinhood, you can. So there's a lot of advisors that are excited to come into the space, and they're waiting for the green light from their compliance department, which
So,
means listing, custody, all those things.
okay. But if rescheduling is announced, that doesn't answer a lot of those questions. But even on an announcement like that, I was going to say, how many new customers do you think we could realistically be looking? I'm not asking for a specific number, but that's still
I
up
think
in the air, right?
yeah, it's up in the air, and it'll look a lot like it does now, right? This is where retail, I would argue, has an advantage. But again, be careful investing in the space. It's volatile, but they can get in right away. Smaller institutions, smaller hedge funds, family offices, like we see in the fund now, they won't have a lot of limitations. They'll jump in, but
Yeah.
there's a pretty healthy, broker dealer environment that would love to even a 0.5% allocation. When you think of the AUM at Merrill, Morgan Stanley, J.P. Morgan, Smith, Barney, all of that, even just a 0.5% allocation in 50% of the assets.
Yeah, I hear
Holy
you.
cow.
So when you look at family shops and smaller hedge funds, like, have you had feedback and conversations, like, in order for them to get in, they need an actual announcement with regards to rescheduling?
It depends, right? The answer varies. There's certainly a lot of people that we talk to that say, let me know when the news has changed. I don't
Yep.
need to go from zero to whatever. I'll ride it the rest of the way.
Gotcha.
There's certainly some amount of people that are like, as an advisor, I can't do it until I get the green light from compliance. So announcement or not, I'm waiting on that.
Gotcha.
And then the rest, and again, it won't be a mainstream investment. I don't think it'll still be a niche fringe kind of allocation, I believe, for a while.
But a step up from where we are is what you're thinking.
Oh my God, yes. Yeah.
No, we were talking about Curaleaf and GTI and TrueLeaf in the beginning. You were talking about evaluating the companies from a balance sheet perspective. There are some companies that are bought on a daily basis. I don't want to name names. We can argue they're a mess from a balance sheet perspective. Do you have to buy those names? And they're small allocations that are in the ETFs, but are those bought just to give a broad spectrum of exposure within the ETF, or do you audit those for, let's say, the health of their balance sheet? Because there's a lot of them not a lot of them, but there's several in there that are, let's say, over levered. You could see the public equity potentially going the same way as we've seen with AIR in the future, and they are currently in the ETF.
I think they were mostly out of AIR, right? I think.
Yeah. I'm just saying AIR, but there are some names. Yeah.
Yeah, I think the answer is one, yes, that we want to have the fund to try to be a representation of this category, right? But I'll go back to my original answer is I need performance, right? That's really what I need. And so Dan does have the ability to concentrate if he wants, but obviously based on transparency, you can see he's made a choice not to just concentrate in those top ones, right? Keeping in mind, we start at the level relative to due diligence of, are you engaged in a federally illegal activity? That alone is your first red flag to maybe not invest in the space, right?
Correct.
We're obviously comfortable past that. So once you're taking that level of risk, if it's between, TrueLeaf and Jushi and, Merrimed or even AIR, it's all a pretty big risk.
Yeah.
It's various levels of risk. And so far, though, maybe in the most recent gap, it's not working well for us. Having those companies that has helped the performance, even on a day like today, like the biggest runners were Glasshouse, Jushi, and Merrimed.
Jushi, I see.
Okay, and it's small positions for us. So how much is that adding? Not a lot, but it's adding a little. And so if I can eke out a little alpha over a competitor, I'll take it.
Yeah. And the question, I think I know the answer to this, but I'm just going to ask it anyway because I saw a hell of a lot of it on Twitter. There were people that were alleging that the basket that you were receiving, you were taking the GTI shares, selling them, and then booking it as cash as an inflow for the day. Is that even possible in the mechanics of the way that the ETF works?
So say that again. So I'm selling GTI, but also getting some incoming at the end of the day?
You're taking the GTI that you're getting, selling it, and then using that cash to book as inflows for the day. Those mechanics aren't even possible the way the ETF works.
No, I think it's possible. No, absolutely right. I can get inflows, and again, I got to use air quotes because we're using swaps and we're not actually getting the stocks.
Yeah.
So I can get inflows, and let's just say it's a pro rata slice of the basket. But either at some point during that day, which keep in mind, I may not know that's coming in. There's a 3 p.m. Eastern cutoff, right? So I could know early, or I could know at the last minute, but I can't know at the last minute of the market close. So that gives Dan some time to figure out what he wants to do. But yes, it's certainly possible where we might have been selling a position. We get a creation unit request. It brings in stocks, and it certainly could be either, more or less, right? Yesterday was probably a good example. I could sell more than I get, and I'm negative on the day position wise, or sell some, and it's offset against whatever I might be getting, and it wouldn't be in the same weighting as the basket currently sits. So no, that's possible, and it's just cash in lieu of a position. It's nothing nefarious, it's just taking cash in lieu, which is really what we used to do. You guys recall at the beginning, which was the challenges relative to the end of day volatility. We were just taking the cash and then going to take our time to allocate it. Market makers are selling off. You were seeing those painful declines at the end of the day. And it just took a lot of work and a lot of coordination that still doesn't work perfectly by any means to try to fix that. But again, as we described earlier, it's a negotiated process. We're not going to take anything that we don't want. And Dan's still going to make the changes that he makes in the portfolio, whether or not we have creates or redeems that day. But yeah, absolutely. The scenario you described can happen. Yesterday is probably a good example. It certainly happened.
Okay.
18 names to look at on a daily basis, and that's only one ETF that you guys manage, but a lot of moving parts right now. But more importantly, it's good times, whether it's good or bad, to be talking about this stuff right now and trying to bring as much transparency as possible. But listen, appreciate you checking in here today, giving some light and shedding some light. And we're going to probably have you and Dan on quite a bit over these next few weeks, especially if we get some news. But all eyes obviously on this ETF right now. Full transparency, I am a shareholder of this ETF. So anyway, appreciate you being under the fire a couple times there with AV, but I thought you guys did phenomenal. And everyone that's out there, let us know your feedback and comments below. If there's any more questions that Noah doesn't get to now, we'll reach out to him afterwards with any more feedback that you want. So again, leave your comments below. In the meantime, Noah, let's keep in touch, okay?
Thanks, guys. Appreciate it.
All right. Great.
Thanks, Noah.
Good stuff. You were lights out there. I think everybody, we got a round of applause sound effect. AV definitely kicked butt there. But what was the big takeaway for you? Sitting on a lot of cash to Dan, but he's not, I don't think, urgent, it seems like, to be spending all this money right now.
I think people just need to understand, like, capital markets are a game. Like, cannabis is not this woe is me like industry that's just being preyed upon. Like,
agreed.
You want to remember where GameStop, where they literally shut off the buy sell button and you had Citadel routing orders that they just wouldn't take because people would have been making too much money. Like, the capital markets are institutionally favorable.
Yeah.
Retail usually has the lower hand. Do I think Dan and Noah are doing anything nefarious? No. Do I think that we're in an inefficient, illiquid, broken market where unfortunately the largest buyer of the equities in the space is the ETF? Yeah. I don't think there's another industry, period, where the ETF is the largest buyer of the stocks in the space. It's just it sucks. It's not efficient. It's easy to be predatory. It's easy to get to be taken advantage of. We're seeing this sector being taken advantage of. And unfortunately, it's part of the game. It sucks, but hopefully we get out of it. We get custody. There's certain things and certain levers that can be pulled that's going to make it a more efficient market.
Yeah.
And these companies all go to big board exchanges, and part of this goes away. But I don't think it's correct to just be pitchforks out against Dan and Noah every time the damn thing goes down, because there was no hate when the thing was going up.
Yeah.
There's some things that there's some questions that still, I think, need to be answered. I think it being a net seller on the day of GTI and Trulieve, like, to me, that just, it doesn't make sense. But I mean, Noah seemed to make it seem like it was justified. And I mean, we live to see another day. The ETF was up 10% today. So, I mean, you're not going to see too many people complaining.
So when I hear a story like, for example, like CIBC, Scotia National Bank, if they don't see Dan buying post 2 o'clock, they can't own the stock overnight. Therefore, they're selling, which is causing what happened last Friday a lot. Like, how does that stuff, and I'm still trying to wrap my head around, because some of the stuff is above my head, and maybe there's other people out there that understand this a little bit better than I do. But these are the kinds of games that are being played behind the scenes right now, and ultimately the retail investor doesn't really understand why.
Yeah, but that's not even the games being played. I mean, those houses that you're seeing, the CIBCs and whoever else you named, I mean, those can be being spoofed by the market makers at Jane Street and Citadel. Okay. You don't truly get transparency on the retail level. You're not looking at Black-Scholes. You're not looking at all the internals of the market. Like, none of it. You're getting half the picture, and you've got 10% of the information. This is it's a game at the end of the day.
Yeah. Interesting comments going on here, but we'll get into those a little bit later. We got to get into our second segment. We'll talk about this after our second segment. Let's bring you on Shane Pennington back to the podcast. Good to see you, sir. Happy Wednesday. How are things?
Getting off mute here. Can you guys hear me?
I can hear you loud and clear. How are things?
Things are great. I've been on a road trip to Texas with my family for the past week and a half, and about to head back to New York.
Right. Sure, you've been busy. You've been following this closely. What'd you think before we get into this whole psychedelic angle? But were you surprised? And I asked that question again to Noah. Were you surprised when you heard President Trump actually say, we're going to be making a decision in the next few weeks? That caught me a little bit by surprise.
I wasn't surprised. I was glad to hear it. As usual, you know, you'd think whenever we talk about it, like, couldn't we just get a statement that, you know, by this date, X, Y, and Z? But when it comes out, it's always like, oh, I wish it had been like, could he have said it this way or that way? Could we have gotten this detail? It's always like that. It's like somehow you go an inch and then you realize going that inch wasn't the foot or yard that you needed to go to get across the line.
I did see you on Twitter last night going back and forth, but you think a direct ruling is probably the best and most likely outcome versus adopting and going with everything through, which is common sense. But, I know that before you were saying we want to make sure all of our I's are dotted and T's are crossed. But at this stage of the game now, you think a direct ruling is the most logical sense?
Yes. I mean, it's funny. Every time something happens, all kinds of ideas come flooding in, and some of them are old and some of them are new. But for this, I mean, we have a record. We've been through the administrative process. We're in an administrative process. And one thing that people need to understand is, like, the way it works is one administrative process is a unit, and the record you build there is the record that will be used to judge that administrative process. If you go start a new one, then you toss that one out, and you can refer to it and you can talk about things that are public record, but really the court's going to be looking at the new administrative record, and you'd be building a whole new one. And the question is, first of all, if you're thinking about switching old for new anytime with a car or with a house or with whatever, you ask, well, what's wrong with the one we got? And if you look at this one, this is a really solid record. And I mean, I've gone over that with you guys before. So I see no reason to get rid of it. And the only reason I've heard from people, and these are just people that are talking on social media, so I actually didn't check who they were or anything, but there were some people saying, well, it's to dot I's and cross T's. And, people who've listened to me before and Eric Berlin, who you've had on, there's nobody more careful than the lawyers who are watching this and know about getting all of those ducks lined up just right. And here they are. We have a great record. We've gone through the entire process. To me, starting again would open up new potential vulnerabilities, not get rid of them.
Yeah. Well, let's now shift to psychedelics. And it seems like this war on drugs that Nancy Reagan unveiled 40 years ago could be coming to an end, hopefully, because new drug policy and the way people are viewing it with this administration is changing. I want to look at Dr. Sunil Agarwal. He originally filed a petition in 2022 asking the DEA to reschedule psilocybin. The DEA denied it, but the Ninth Circuit Court pushed back and told the agency to re-examine its decision. Now, as of this week, the DEA has formally sent the petition to the HHS for scientific review. So this petition sat in limbo, and now the DEA has forwarded it on, Shane. So what does this tell you about where things stand for psilocybin reform? And are we looking at, let's face it, a real turning point of where we are when it comes to drug policy with the current administration?
Yeah, and just so people know, I worked on that petition. Matt Zorn and I worked on it with a team of other lawyers. And the case that ended up getting reversed, Matt actually argued that case in the Ninth Circuit. So this is our stuff, and there are the other lawyers I want to mention. I mean, we had a great team: Catherine Tucker, and from Perkins Coie, Andrew Klein, Tommy Tobin, Holly Martinez, many others have been working on this for years. And this is part of a bigger thing that's been going on that I won't go through all the details, but suffice to say, we've been working with Dr. Agarwal to help him and his patients with DEA for now, I think 5 years. And yes, it's a big deal. It's a big deal because the real roadblock you usually have with scheduling actions is DEA.
Yep.
And once DEA sends it to HHS, look at cannabis. It took a while. Once it went from DEA to HHS, the only way that happened was because a sitting president of the United States directed that basically to happen, right? And then when it went to HHS, we got really great analysis and scientific backup to support the petition. The petition we have here is different, because it's psilocybin, and it's also the backdrop here is that he's trying to use it under right to try laws with end-of-life patients. Mm-hmm. And so the wrinkle here was, instead of arguing currently accepted medical use and treatment in the United States, which is cannabis, because you have all of these doctors using it in treatment with patients across the country. That's not the case with psilocybin yet. So, but there's another provision of the statute that no one really pays any attention to that says, or you could have currently accepted medical use with severe restrictions. And the right to try law, we argued, where you have a breakthrough therapy drug that FDA has said this drug is showing such promise through phase 1, phase 2 trials that it's better than anything on the market for these life-threatening conditions. that's a big deal. And where Right to Try puts all sorts of constraints on its use, that is enough to show severe restrictions, currently accepted medical use for that pre-FDA approval medical use. And the court said DEA couldn't slap it down like they tried to do. And we believe HHS and FDA obviously believe that psilocybin has promise. We know that not just from the breakthrough therapy designation, but also we know, RFK himself testified recently about the promise that they see in these options, and they're trying to get access. So we feel good about where we are, and getting it to HHS is a huge deal. But as we also all know from the cannabis history, we have a little ways to go yet.
Yeah.
I don't want to connect dots, but does the fact that they're willing to evaluate the rescheduling of psilocybin to 2 give any sort of foreshadowing to the propensity of the powers that be right now to start to loosen drug laws and as a whole, and give any bearing on the process that's going on with cannabis? Or there's no correlation between the two whatsoever?
I mean, I think you have to look at, there is a correlation, but I don't think you should look at anything in isolation. You have to kind of step back and look at everything. We have the testimony from HHS. We know that Doug Collins at the VA has had a lot of good things to say. McCary at FDA, we know, has positive views of some of this. We see what's happening with cannabis. The way I think about it is, it's like you've had this massive snowball kind of building up behind this dam that has been DEA, and it's really got a lot of momentum behind it, and it's starting to roll downhill.
Yeah.
And just keying in on the right to try, which is how they got here with psilocybin. Do you foresee that potentially becoming, I don't want to call it a loophole because I hate to use that word, but other psychedelic compounds kind of following that lead to potentially get rescheduled off of 1 to 2, or lightning's not really going to strike twice in that capacity?
So first of all, it's not a loophole. It's a statute that President Trump signed into law during his first administration. And he actually was, very proud of it, rightly so. And, just to give just one little bit of color on it, Right to Try is kind of like expanded access, where we get people access to a drug before it's approved. There are other ways that this has been possible, but what Right to Try does is it takes FDA out of it, and it allows the drug sponsor to get it to the provider under certain conditions. And what it does is it removes red tape and allows people to make decisions. And these are people who can consent to it, have informed consent and so forth. So there are limitations on it. But where those things are the case, this allows it to go forward. President Trump has already touted, he signed it into law. This was a Trump product. And so we think, the administration should be supportive. So far, we're seeing that is the case. I also want to applaud DEA. They haven't always been, we've had our issues, but when they do the right thing, they deserve credit for it. And this
absolutely.
They sent this over. They didn't, we know that when they don't want to do something, they can just sit on it. Right. Mm-hmm. And that's what they do a lot of times in a lot of contexts. But here they're moving forward, and they should get credit for that. And actually, I think that I hope they're turning a page and they see that this is going to really, the world isn't going to fall off its axis when they do what the law says and do their jobs with all of this.
Makes you believe that times have changed in the past 6-7 months, especially with this new administration in play. And that's what's encouraging. But when we look at timelines, like how I look at this and look, is there stuff that could derail this? I don't know what they are. And maybe that's a question for you. Is there something that could hold this back? If so, what would it be?
Sure. So first of all, this is a lot simpler than cannabis in many ways, because we're talking about going from 1 to 2. We're talking about a limited context. We have a novel statutory argument that a court has already it didn't reach the merits of it, but it told DEA, if you're going to deny this, you need to have really good reasons for it, not just some kind of slapdash thing that you throw together. So they're already on notice about it. So there's a lot of momentum behind it. And we know that HHS seems to be, supportive of access under, with these guardrails in place. That seems to be pretty safe. And then to kind of circle back to Anthony's prior question that I didn't get to, I just want to say, there are other Schedule I psychedelics that are similarly situated to psilocybin. You have MDMA, you have even LSD as breakthrough therapy designation, and they're coming because the thing is, we haven't studied these drugs, right? And as we study them, we're going to learn more about them. And yes, if this precedent happened, it would be a very, very, big deal. It wouldn't open some sort of huge floodgate for everything, but there would be a blueprint out there. And that's something that, we've been working on so hard with cannabis and I and the teams I work with for a long time saying, look, you got to push every angle and you've got to be determined and you got to keep the pressure on. And when you do, slowly but surely, the wins start piling up and the momentum builds. And look, it's happening. It's happening.
Someone asked, didn't the DEA do this with psilocybin because a court ordered them to do so? Is that true?
Kind of. What the court ordered. So what DEA initially said was no, in literally like a 1-page letter that just said, no, it's not FDA approved. It can't have currently accepted medical use. They didn't address our argument about severe restrictions, et cetera. And the court said, that's not good enough. You can't just ignore what they're saying. You can't just slap this down in a 1-page letter. If you're going to deny it, you have to give a reasoned explanation for it. And this doesn't pass muster. So they sent it back to DEA and said, essentially, either transfer it to HHS, or if you're going to deny it, show your work. And this isn't it. And DEA fairly promptly, in my perfect world, they just would have transferred it to HHS immediately, but they waited for the administrator to be confirmed or whatever it was. Yeah. And then they sent it to HHS, which shows they didn't want to try to write that longer essay about how it's, it could be denied.
Yeah.
And so to answer your question, Shad, about what else could derail it? Well, if HHS writes a favorable recommendation and scientific evaluation, then DEA has the choice of whether to initiate proceedings and open up public comment.
Kind of like what we did with cannabis.
So that's what I was getting to. So if the DEA had to move because technically a court ordered them to, couldn't a court force them to move based on the precedent from the HHS and OLC saying that cannabis should be rescheduled? Or am I not looking at that the right way?
So all they ordered them to do was either transfer it to HHS.
Right.
Okay. Got it.
Or
not act.
If you're going to deny it, it's like you're at the door, and at the threshold, DEA was like, I'm not even answering the door. Right.
Got it.
And the court was like, you can't just not answer the door. If you're going to not answer the door, you have to have a good reason.
Yeah.
And they didn't have a good reason, or they didn't want to, whatever. They decided they're going to go ahead and transfer it. And they did that. And so now, could it get derailed again? Well, DEA could take a long time deciding whether to, initiate proceedings after getting the.
Which is what we dealt with for a while.
I don't. Do you believe that? Like on paper, it looks like this won't take very long, considering. Go ahead.
Notice that this is different than cannabis, right? Like we didn't know what was going on behind the scenes with this interagency kerfuffle and all that. There is no apparent disagreement. Like DEA transferred it. So why would they have done that?
What was the timeline when Biden and the DEA transferred over the HHS, when the HHS did their whole report back in August 2023? From that timeline, was that, I don't know, was that a couple of months?
I can't remember off the top of my head, but it was pretty fast, actually, considering that there was this big litigation inside the executive branch that OLC had to weigh in on, and there's 252 pages of analysis. This doesn't require that much analysis. I mean, the facts are all clear. There's all this data, clinical trial data on this breakthrough therapy drug. It either has this use or it doesn't. If it does, it has to be out of Schedule 1. So it's a pretty clean thing. And we already know that DEA has said, okay, we're not going to deny it at the threshold. So I don't see why they would do that. But if you ask, could they delay? Of course. Could somebody change their mind? Right.
We realistically could see this rescheduled sooner rather than later. And of course, that's a pretty broad term, Shad. But we could actually, we could see like terminally ill patients or veterans gain access to this a lot sooner. What most people think is what I'm reading and guessing. Yes.
Yes, you could. And that's extremely exciting. And it's like, look, it would be a huge, huge deal because you'd have now cannabis would be, if cannabis got moved to 3 on the basis of the 2-part HHH test that started in 1982 and that HHS fleshed out in the earlier evaluation, that would be a new way to show currently accepted medical use. The first time it's been applied, then currently accepted medical use with severe restrictions would be the first application of it to a Schedule 1 psychedelic. And that would open that door, and slowly we would be chipping away. And once you do that and you get these dominoes falling, stigma drops, people start to see that it actually does what people are saying it does. Yeah. These are the kinds of things, it's like once you let the toothpaste out of the tube on something like this that's got so much political support from all over the place, I think momentum is only going to build.
Yeah. So if you're an international psychedelic company, I'd probably want to move my head offices to the US, because in the event that we do see this rescheduled and we look at end of life care, especially when we look at some of the people involved working with veterans in the VA, how does that all work? As far as establishing a relationship, and is it based on data that you've done abroad to actually show and showcase to the VA about partnering with them? Like, how does that all work, Shane?
You'd have to have, some of the folks who are actually working on that on your show to tell you. I'm not privy to all of the inner workings, but, I know that for example, there have been NIH studies that have been done through public-private partnerships. We know that RFK said that HHS was talking to the VA. So we know that they're able to talk to each other and they're able to get these things done. As far as how it actually happens, I'm not exactly sure about the mechanics of it.
Fair enough.
What I do want to take just a moment just to say, because I've worked on this case for so long and I don't want this to be missed. There are real people in this case. Okay. There are real patients, a real palliative care physician, Seattle based, who has a former DOJ employee who has, is got a terminal cancer diagnosis, who's trying to get access to this treatment to have, a better end of life experience where they aren't, dealing with crippling anxiety and depression the entire way. These are real human stories, and there are more of them, and there are veterans, and they're we're all going to face that end of life scenario. And all we're saying is that where, people's doctors say that they should be able to have this, and the law says they should be able to have this, people should be able to make those choices for themselves and, have the kind of end of life experience that they want to have.
I don't think people understand that until they actually experience it themselves when it comes to a family member, but that's usually when it hits home. And I will say one thing, that is a great thing that RFK heads the HHS. And I'm not saying it's the reasons why this is advancing, but it helps in some ways, knowing how he's had his own personal experiences. And I think he's been pretty open about how it saved his son's life as well. So
these terrible stories are a big part of why we have kind of an exciting time right now. It's a way to turn those things into something really meaningful.
Yeah. We used to say that when we'd go to Washington, as soon as something happens to one of the lawmakers where it hits home, that's when you're going to start to see some movement. But
absolutely.
Anyway, listen, always great catching up with you. And clearly when we get this announcement, if it's positive, we got to have you on, and fingers crossed it does happen. And obviously in the cannabis space as well. But when that day comes, hopefully you can get a banner list of customers, guests. God, I can't even talk. I'm going to sales mode right now, but hopefully we can get a lot of people on that day as we go live right away and just have people on throughout the day. So
I'm telling you, it's going to happen when I'm on my golf trip. It's going to happen it's going to happen Friday, September 5th. I guarantee you it's going to happen.
Well, looking forward to it.
Hey,
thanks so much for having me, guys. It's always great to talk with you.
Yeah, as well. I'm envious too. I'm getting a little thin up here, my friend. You got a good head of hair there.
Thank you. Appreciate that.
Anyways, good seeing you, Shane.
Thanks, Shane.
All right,
Bye.
good stuff.
Bye.
What do we got here today? Well, we're at the hour mark. Long live stream here today. A lot of information, but I hope everybody got some.
Hey guys, that's not a serious prediction. I'm kind of just talking out loud. Like, if it were going to happen, it would happen when I'm going to be out of town on my golf trip.
It is amazing the world we live in. Hey, damn, gone. He said it.
So Friday, September 5th is not my official prediction. I'm just saying I wouldn't be surprised if it happens then.
Yeah. Gary, thank you very much. Dan was not on as well today. And the reason why is because he was doing an interview with the New York Stock Exchange closing bell. So that is why he was on. So we reached out to the team. Dan couldn't make it, but Noah did. And hopefully people got some great takes on that. But Shane was great too, just to explain how things are moving along. And it realistically, when you look at all the data, this could move a lot quicker than the whole process that we experienced a couple of years or have been experiencing with the whole cannabis rescheduling. And you can't help but think with this new administration, as I said before, times have changed since they stepped in. So hopefully the people that need this get it, because it's important. In the meantime, we got anything set for Friday? I think we were working on a guest. Off the top of my head, I can't think of it. We got nobody. Latest interview with Big Mike from Advanced Nutrients is actually going out tomorrow morning. He's got some great stuff to talk about, including some original days in cannabis from the 1980s to where we are today. So that's going out tomorrow morning at 8 a.m. Eastern time. Big thanks to everybody that got a chance to see the video I did yesterday with regards to rescheduling, the topic going mainstream. It's doing very, very well. But more importantly, job well done by you today on your conversation with Noah. There's a lot that I learned from both you guys as I kind of sat back and listened, but you asked some really good questions, and judging by the feedback from the comments, people were pretty happy. So again, great job. All right, everybody, enjoy the rest of your day. We'll see you back here Friday, 11 a.m. Eastern time. In the meantime, stay open-minded, stay connected. We'll see you next time. The latest TDR Trade to Black podcast. Take care, everyone.
Thanks, everybody.
Well, I liked that one, didn't you? Let us know by leaving your comments below, and stay connected with us here at the Trade to Black podcast. We appreciate you logging on here today and learning more information about where this industry is headed. If you have time, make sure to like, subscribe, and smash on that bell for all notifications, and keep the conversation going by leaving some comments below. We always love to get your feedback. In the meantime, enjoy the rest of your day, and thanks again for watching our latest Trade to Black podcast.